A crypto trader gets sandwich attacked.
I messed up recording this and it's going to have a lot of reverb. And I made this video because I really wanted to talk about sandwich attacks. And yeah, we got to do that with this clip.
While making a stablecoin swap, losing over $215,000. Essentially, they lost about 98% of their transaction. And we're going to go over what happened and how you can protect yourself in the future from this happening to you. Now, this is kind of a common problem whenever you're trading in cryptocurrency, especially when you're on an EVM chain. That is something that uses the Ethereum virtual machine. These are Ethereum, Unichain, Polygon, Optimism, Base, all of those that use the EVM framework. They were trading USDC to USDT. Typically, you don't see much of a loss there. But if they were using a swapping platform that doesn't protect against these MEV attacks, and they had the slippage very high, then this is going to happen. So whenever you're making a large transaction on an EVM chain, you want to be protected against these kinds of attacks, and you want to make sure your slippage is very low. Now, in this case, their slippage was probably not set at all. Very likely, they were trading meme coins that had a lot of slippage, which means they needed to not have anything set so they could execute their trades. Now, a lot of these are technical details that is only relevant to you if you are a DeFi user and want to get involved in all this type of stuff. But yeah, it's very dangerous, and it really only happens if you're trading higher amounts, significantly higher amounts. And this does happen on layer 2 blockchains as well. This happened to me on Base. So yeah, this happens everywhere. So don't think that just because your layer 2 blockchain is faster and cheaper, that an MEV attack isn't going to work. Now, to better explain this attack, which has been going viral on Twitter, you could always look in the comments for additional clarification, which we're going to do now because someone explained it excellently. Yeah, that's a word. All right, for anyone wondering how this can happen with stablecoins, imagine you're at a market buying a rare item and everyone can see your order before it's processed. A sneaky trader, the MEV bot, watches you and decides to profit off your move. Here's how it plays out. You place your order and you tell Uniswap, I want to swap $220,000 of USDC for USDT. This order goes into the public queue, the mempool, where anyone can see it. The bot jumps in front running, that's what it's called. When it front runs your order, it gets ahead of you, so its order can get processed before yours. So the MEV bot quickly places its own order before yours. It buys a bunch of USDT from another source or manipulates the Uniswap pool to drive up the price of USDT slightly. This is like the bot buying up all the stock of that rare item, making it more expensive right before you buy. Your trade executes when your swap happens because the bot pushed the USDT price up and you end up paying more USDC or less USDT. Basically, a lot of slippage. You didn't get the trade that you think you were going to get. So instead of getting $220,000, you got about $5,000. The bot sells after, back running, right after you trade. The bot sells the USDT it bought or manipulates the pool again, profiting from the price difference. It pockets the extra value, and here we lost $215,000. This sandwich attack happens because the bot places its buy order before yours and its sell order after yours. So basically, a sandwich. That's you. Here's a buy order. Here's a sell order. You're buying. You're doing your trade in between, and it's taking advantage of you, which is why these are called sandwich attacks. Now, more literally, it's not a sandwich attacking you. It's just the situation between the transactions. This sandwich happens because the bot places its order before yours and its sell order after yours, squeezing your trade in the middle and taking the profit. You might wonder why this happened with stablecoins, which are supposed to be one-to-one, even though stablecoin pools on Uniswap have slight price imbalances due to liquidity and trading activity. A large swap like $220,000 can shift these prices temporarily, and bots can exploit that tiny window even though it can happen in less than a second. The best way to avoid a sandwich attack is to make your trades less attractive to MEV bots by doing smaller trades, low slippage, high liquidity pairs, and use tools that hide your transaction from the public mempool, private relays, MEV-aware DEXs. And if you're looking for an MEV-aware DEX, that would be something like HouseSwap. It's not 100% foolproof, but these steps can significantly reduce your risk. And we're going to like that. So that's just essentially how sandwich attacks work. And then to protect yourself against this, you want to verify what is happening in your transaction. If you are on an EVM chain like Base and Optimism and things like that, you might want to use Rabby Wallet. You want to do your swaps and you want to see what you're going to get. It's going to show you you're trading this much, you're going to get this much back. So you want to be careful when you're trading. You want to make sure the slippage for your trade is set to a very low amount, in most cases less than 3%. And stay safe out there. And I guess if you have that much money to lose, you want to be very careful about your trades even more. Or any degens out there, well, you know what happens when you make it. You don't want to lose it all in one transaction. All right, with that, I hope you got your full value for today. This was a very long shot about just one issue, but I just kind of felt like making a video and I haven't done that in a while. So there you go.